Banks are coming for your yield. In fact, it's going to be lawfare now. Today, we'll break it down with you. I think that's going to be a good one. You guys, of course, I do want to thank our sponsor, and that is iTrust Capital. This is where you guys can go out there and diversify some of your assets into a crypto IRA. Very easy to join, very easy to set up as well. All you have to do is just visit itrustcapital.com. A couple of things you can do over there other than just digital assets. You can also do gold and silver, self-manage your own IRA. So check it out. Use our link down below. It's going to give you a $100 funding reward just to get started and get going on your own crypto IRA. All right, so let's go into a couple of points. We've got a guest coming on. Austin Campbell will be joining us here in a minute. I do want to take a look at a few things. One, of course, is what's happening on Polymarket with Clarity Probability, which is starting to dip, I guess, slightly, coming off that 74% high, slipping down into the 70% run right now. Some of this could be induced with what's going on with Iran and keeping Congress busy. Some of this also could be fatigue in the market. But if you look at some people out there kind of pointing at this is the banking industry, and one of their lobbyists talking about this, that the compromise on Clarity is just not going to happen. Simply impossible for the banks to roll over in this fight, meaning they are not going to go away quietly. And you have the U.S. Democrats right here. They are ready to pass the crypto market structure legislation. If that is actually in the cards, this could get very interesting. Mainly because that means maybe people are going against the banks on this, including our lawmakers. Well, we'll find out. The other thing that's happening is Trump is putting some pressure on them. And what he said here is pretty simple. I'm not doing anything until we get this new, the Save America Act passed, meaning that slows down Clarity. Here was Nick coming in talking that we could see as soon as July, possibly by DC Insider, but it could reach the floor sometime in August as well. So we've got July, August, maybe in the window here, breaking it down. The real question is probability. So I wanted to bring in Austin Campbell coming in. You guys know him from ZK Consulting. How are you?
I'm doing very well. How about yourself?
Nice to see you there, Austin. I want to go into a few points. One, of course, is what's happening with Clarity. And we're going to do a whole rundown at the end of the show as kind of our lightning round. I know you guys love it, but I'm going to show you this tweet here by Ron Hammond, who is a former lobbyist, now Wintermute graduate. And he's in here talking about that we may end up getting just a watered down version of this bill going in. What's your opinion right now on the current state of Clarity?
It is, I guess, pun unintended, deeply unclear where this thing is going to go right now.
Yep.
You have competing factions within crypto itself as to what people want out of the Clarity Act. You also have a clash, as you've been alluding to, between the banks and the crypto people. And that is before you get to the political problem between Republicans and Democrats over what's going on with the Trump family's activities. So there are a lot of rocks to still crash into.
Where would you put it? I mean, are you in agreement with the Polymarket right now? It's about a 70% probability here on passing?
I would take the under on 71. Always bet against major legislation in an election year. Let's not forget that midterms are coming up. That is a statement beyond crypto. But two, the bank lobby is one of the more powerful lobbies. And right now, even though I think it's on incorrect premises, they've come out against the Clarity Act very strongly. And so those weigh heavily against it. And I don't think people have taken that into account.
Well, they're talking about this right here, which is kind of interesting. They're kind of waging war across everything. This is the banking lobby weighing lawsuits against the OCCs. These are, of course, the OCC alignment around bringing a lot of these new, fintech companies into where they have a master account. Will that have any bearing on their maybe consideration of where Clarity negotiations should go from here?
It should, but so far it really has not. If you look at the bank position on this, it is essentially, we are deposit-taking institutions who lend to the average American, and anything and everything that could impact that in a negative way, where negative definitionally is good for the banks, they are opposed to.
Yeah.
So they're opposed to additional competition. They're opposed to the skinny master accounts. They're opposed to the Clarity Act. But under the hood, all of it, Paul, to a point I think you've been making to some extent, is the banks arguing their own interests here.
Yeah, for sure. Do you think that we're at a state yet where the bipartisan congressional group is now starting to kind of look at this as it's kind of falling on deaf ears. Are we at that state yet? Now that the president has come out and kind of said, hey, banks, you need to come to the table.
Certainly from the big banks, I would say that. If you look at the bank lobby itself, it's important to sort of divide it into two groups. On one side, you have the very large banks, the JP Morgans of the world.
Right. Mm-hmm.
I think the reality is their pleading is somewhat being ignored because they've done very well. They're highly profitable. And everybody kind of looks at that and says, you should compete on fair terms. Now, the other group is the community banks, local lenders. Their concerns are going to be more persuasive with Congress in the House and in the Senate. And I think that group, unfortunately, has kind of bought some of the big bank talking points and might be arguing against their own best interests and impeding this bill.
I am totally in agreement with that. I think that the regional banks could actually become the winners because they can go to market pretty quickly with some pretty innovative products that might put them on, I won't say equal footing, but on at least similar footing. And if you look at the demographic of their customer base, if you went to a 60-year-old in Tulsa, Oklahoma and said, hey, I'm going to give you 1.5% on your savings and your money market, these people would be over the moon on that. So I think it would lock in a lot of these regional bank customers, maybe long term. So I kind of agree with you. When you look at the situation right now that's happening around the bill itself, because there's a lot of massaging of what it's going to look like. Eleanor Terrett kind of hit on it right here, saying that right now we're talking about House members that are making it very clear that they're not going to tolerate this 2030 sunset provision on CBDC's ban. What do you think? Do you think we're going to get a CBDC narrative that will come out in the Clarity Act?
I think the CBDC thing is probably a distraction and will end up getting stripped out entirely if you're going to pass a bill. And the reason I say that is right now, if you were to go speak to the Federal Reserve, they will tell you we can't do a CBDC without congressional authorization.
Right.
So their current stance is that CBDCs are illegal. From there, why would you do anything? The objection of the House members to this, which I think is fair, actually, is if we say it's illegal, but that ban expires in 2030, did we not just implicitly make it legal as soon as that expires? I would say I actually think it's an advantage for the United States not to have a CBDC. If you've looked at rollouts across the world, mostly people don't want these things. Right. You've seen nations try to deploy them like China in a very technocratic way or, somewhere small like, the Bahamas in a somewhat disorganized way. But the general statement is that people don't want money that the government can control or take from them at a whim. Right. If you think about the value of something like physical cash, it's because if it's in my wallet, I own it. And that's kind of the end of that statement. And if you're going to go to electronic cash, you want private institutions that are fighting for your business like banks. The government having programmable electronic money is being rejected by consumers globally. I actually think the United States is avoiding wasting time on a losing strategy by instead focusing on stablecoins and private market solutions.
I was looking at a tweet you put out, and this was in reference to Kraken and them getting their master account, the Fed master account. First of all, were you surprised? And what does this mean? What does this allow them to do?
So zooming out on the problem, with many of these things, it helps not to start with crypto. What's going on here is more similar to the original version of PayPal. And there's a thread that goes through American economic history here that leads to an accident that has created a monopoly for the banks, which is to say, Paul, if you and I transport ourselves from the present day back to 1970, the overwhelming majority of our economic activity does not touch a bank. We are paying for things mostly with cash. Nowadays, even to buy coffee, you're probably using your bank account, right, with digital payments. And so banks have inadvertently been given a monopoly over the payment system in America in a way that, quite frankly, they were never designed to have. So Christopher Waller, who is one of the senior folks at the Fed, proposed this idea of the skinny master account. And I actually spoke with him about this at a Fed event at one point and asked him what he was thinking. And one of the things he referenced was this idea that splitting the payment system and deposit taking and lending apart is not a terrible idea. It leads to a more resilient payment system and creates more fairness for people who purely want to buy a coffee and care less about getting paid yield. Kraken's master account is exactly that. When you look at the skinny master account, here's what you can do with it. You can send payments. I'm done talking. That's everything it lets you do. They don't pay you interest. They don't let you borrow at the discount window. You're not really a Fed participant in the sense of a bank. You can just use ACH and wires.
But Waller was he pro stablecoin? Because I kind of thought he was against stablecoin.
So I think one of the things to be careful about is people's previous views of pro or anti-stablecoin may be changing post-Genius. Because am I pro a stablecoin that's offshore and won't tell us what's in the reserves, like the original version of Tether, is a very different question than would I be opposed to a box filled with T-bills that is regulated in the United States and used for payments?
Yeah.
I will remind everybody that already exists. Fidelity has a cash management account powered by their government money market fund that is in the US financial system right now. And people have been fine with that. So I think the question has changed a lot, and that's throwing people off.
Yeah, well, it was originally, I think what I'm getting at is the stablecoin yields was what he was kind of against. So wouldn't he side on the side of the banks in that situation?
So the Fed, I think, has a specific concern around stablecoin yields, which I will grant is probably fair given their past behavior, which is they don't want a narrow bank. And what a narrow bank is basically you give money to somebody and they put it at the Fed.
Okay.
And that's 100% of the transaction. There was actually a proposal for a thing called the narrow bank in 2009 that the Fed rejected. They don't want stable coins to be a back door where people give money to the stable coin puts it at the Fed, earns interest, and just pays it back to people. I think Waller's views on things like rewards or activity-based yield are probably significantly more favorable.
I'm looking at this Treasury hold law. They're recommending that Congress would create a safe harbor hold law, freezing suspicious digital assets, urging lawmakers to define which DeFi actors should be and also face AML and CFT obligations. This is much bigger in terms of targeting DeFi. How do you translate this? Because this could be big.
So on the first part, I think this is Treasury trying to grapple with two competing goals. Goal number one is, can I have an always-on, constantly usable financial system where not everybody has to KYC at all times to use everything? And the other part is acknowledging there's been a tremendous amount of financial crime in the current crypto ecosystem that has not been effectively interdicted. Look at things like the Bybit hack, look at money laundering through some of the stable coins, and that is improving. I want to be clear, the traditional system has a lot of problems. But what Treasury does not want is a paradigm where people can see bad things happening, have knowledge that they are probably illegitimate, and then just kind of let them go by anyways. So they're kind of trying to strike a balancing act here. And this is why you will notice it only says freeze. They are not talking about taking people's money away, right, unilaterally by third-party actors, but they are talking about the idea of maybe don't let $1 billion leave if you think there's been a hack without some sort of controls around that, especially about stablecoins. The second part is to DeFi actors is when you drill underneath the sort of veneer of decentralized finance, there are a lot of projects that have tried to do things the right way and relinquished control and operate autonomously. Uniswap is a good example of somebody who's been relatively responsible. But there are many that, if we're being totally honest with each other, dinos, right? That is to say, decentralized in name only. Mm-hmm. And in those cases, I think Treasury is looking at the facts and circumstances and saying, listen, if you have elective control over wallets, if you could stop user transactions and funds, if you have those powers, you cannot pretend to be decentralized while retaining all of that ability.
Well, okay, so you're talking about true DeFi versus what you're referencing there. But even though you're talking about dinos, decentralized in name only, you're talking about freezing assets, which seems to me like that seems like a CBDC to me. If you can start to control assets, I mean, that's a slippery slope, Austin. The next thing is now you can seize assets, or you can say when you can only spend those assets, and if it matches up to a social credit score. This is dystopian, but that seems like a first step.
I would remind everybody US dollar stablecoins already work that way. right? Like forever that you want to say about them, most of them have freeze and seize capabilities. And the reason is if you're a stablecoin issuer, and I say this having worked at Paxos and managed a stablecoin, and the Department of Justice shows up and says there's $2 billion of your stablecoin owned by the North Koreans. And you go, yes, but we're decentralized. We can't do anything. They're just going to go down the street to the custodian where you have the money and take it from you there.
Yeah.
If you're using real world assets, you have to comport with real world laws and frameworks. And that's sort of an irreducible problem in this space. I would tell people who are worried about the truly dystopic sort of end game, there's solutions for that. It's things like Bitcoin or some of the privacy coins.
Yeah.
It is not using real world assets. And I think Treasury here is just acknowledging that reality. I also, as an American, think it's much better to vest that power in third party commercial entities who have like a desire to build businesses and a profit motive and like want customers. Because if a stablecoin issuer constantly bricks and freezes your tokens, you're going to stop using them.
Yeah, well, that's going to be the main thing. And I think the first time that we see a major bank do that, you could see a flight into DeFi pretty quickly of the savvy people that know what's up. Because there's going to be a lot of people that when JP Morgan, Chase, Bank of America say, hey, we're going to take all your Bitcoin and your CBDC, or your, stable coins here, and we're going to give you some yield on them. There's going to be some people that go there. They're going to do that because they want that security. They want that. But I think the first time we get one of those freezes on it, that will change people's minds pretty quickly.
Yeah, I was going to say, I will remind everybody Tether has already frozen hundreds of millions of dollars of funds, and people seem to continue using them.
Using it.
I would suggest if you look at financial activity writ large, the question really comes down to, are you freezing people where beyond a reasonable doubt everybody agrees they're bad actors or not? Because, for instance, when Tether froze a couple $100 million of funds affiliated with the pig butchering scammers in Cambodia, everybody was like, you know what, that's fine. But if Tether were, Paul, to say to freeze your funds because you said something on the show that they didn't like, then I think they're going to have a commercial problem. And that really is a question of where the line goes.
Does this kind of system being put in place start to slowly erode the true DeFi networks that are out there because all the money is essentially pouring into these controlled mechanisms, whether it's Tether, USDC, or other, bank stablecoins that eventually are paying high yield? I mean, even X is going out here promising 6%. I mean, that's what I'm talking about. So that gets a little dicey, I would think.
Yeah, and so one, you were correct that I think call it cypherpunk idealism of totally like permissionless money,
right,
that will always have a place, but that place is probably smaller than people think and smaller than some would like. The trade-off, though, is what Treasury is proposing here is actually significantly better than the current financial system where it's even more restricted. So there are some degrees of trade-off and transmission. And I would encourage anybody who's concerned about what you are raising here, stay in touch with people in the House, stay in touch with your senators, look them up and write to them, because keeping this balanced and in favor of the people is the most important thing we can do.
What is your position on self-custody? Because this is the other question mark that I think a lot of people are concerned with, is that self-custody may go away. Obviously, if you look at cash, being able to hold your own gold, those kind of things, that already exists today. So why should it not transfer over to digital as well?
Yeah, I'm a strong proponent of self-custody, not just for the traditional reasons around cash, but also as somebody who worked at large financial entities, it's a way to keep them honest. Right? When people can take not only their money out, but also their securities out if they don't trust you, that actually has a very good forcing effect on the ecosystem to force people to behave well. So I'm strongly in favor of it.
I like it. We put out a tweet this weekend. Of course, Florida advanced a bill. Now it's going to go to the governor's desk that essentially is going to give Florida the ability, first state to pass a dedicated stablecoin framework. And this is called State Bill 314. This is done. So it's going to give legal clarity for issuers, so not a security, consumer protections, one-to-one reserves, which is unheard of. Pilot program, you're going to be able to pay some of your government fees in stablecoin. That's a big deal. And then it's also going to be aligning with the Genius Act. So my prediction is that we're going to probably see some businesses, because we're already losing so much money to these merchant fees here in the state of Florida. It's the biggest tourism place in the world, and we're paying these ridiculous merchant fees. That essentially could flow back into the state of Florida. Would this be a big deal for Mastercard and Visa in a bad way?
Both yes and no. It's important to look at who gets what part of interchange. So Mastercard and Visa take a flat fee out of interchange amounts and are passing the rest to the banks involved in the network.
Exactly.
I would tell you, I think it's worse for the banks and the high-end rewards programs than it is specifically for Mastercard and Visa. On the other hand, if the system works well and it actually generates more volumes as a result of that, that part can be good. It's sort of the Jevons paradox thing of something becoming cheaper, increasing demand. And so it could have a very positive effect on total payments going through the state of Florida if it's done properly. I would also say an adjacent benefit is if you look at Wyoming and the Frontier token, that state is launching a stablecoin partially for government payments and transparency reasons. I have a feeling that logic will resonate in Florida as well. And if you develop a greater trust framework with your citizens, you will attract more business and thus more payments.
No doubt. I mean, Florida's on the front edge here. I think whether it's DeSantis or our next governor, if they can stay on track here with what's going on in crypto, will be huge. Let me get into the lightning round with you, Austin. We always do this to kind of get a quick rundown. This is my first question. Trump's tweet against the banks made a huge difference in terms of clarity, getting at least back up to the front of the line, both in Congress and in terms of attention. What do you think?
Yes.
Yeah.
Trump is the executive controlling the banking regulators. Banks should pay attention to his tweets.
Yeah, for sure. Clarity is ironically signed on Independence Day, you think, by July 4th. No?
No, Congress doesn't do anything that quickly or while they're on vacation.
I am going to go yes on this because sometimes I'm just too optimistic. Banks are ready to call your bluff on not passing clarity. It's bad for banks. So what do you think?
I mean, the banks are ready to call that bluff. I just think Congress will run them over.
Oh, okay. I'm going to go in the middle. Yeah. Who told the OCC to put out the yield policy right before March 1st deadline? Was that a coincidence, or am I just reading the tea leaves here?
No, nothing in there is a total coincidence. I know they had been working on it long before that, but the exact release date might have some significance.
Okay, so we're just going to say it. We'll just say the banks did that. If yield policy is left to the Treasury, Scott Bessent would side with who?
Definitely Coinbase. The Treasury is looking at global Treasury distribution. Anything that makes that more appealing, they are interested in. And by the way, keep in mind something like 85% plus of current buyers of stablecoins are non-U.S. persons.
Right.
Another reason the banks don't have the best argument here.
I just remember what Bessent said about Brian Armstrong. He was not very happy. Now, it was at a different time, too, in that negotiation. I don't know if he's changed his position. Based on what he said, at least, and I can only go off of that, I would say I think he would side with the banks on this. I'm just going off of what you're saying, Scott, so don't kill the messenger here. Bank fees will skyrocket if banks have to competitively share yields with customers.
No.
You don't think so?
No.
I'm going to go against you there. I think they're going to raise fees, give you interest, and they're going to raise the shit out of your fees.
I think if you look at banks right now, only about 20% of their lending is mainstream lending, right? Go look at the balance sheet of the top 20 banks. About 20% is mortgages, small business loans. The stuff that's going to go up in price is purely consumptive things. So like, yes, this may actually impact credit cards, but not so much deposit accounts. The places where things will get more expensive is all the institutional banking stuff, sales and trading, securities, issuance.
I'm going to still stay on my no because I know that bankers are greedy.
That is an incontrovertible fact.
Banks will eventually charge added fees for stablecoin minimums, priority sending, gas, whitelisting wallets. Do you think we'll see a lot of that nonsense?
So the answer is yes, they will try it in the short term, but the people doing that will eventually lose. That is a market economics question, but it will take time.
Yeah, I'm in agreement with you. I think they'll try it. I think they will fail. And I think the market will push back and they'll eventually come to the table about all this stuff. DeFi and privacy will be thrown under the bus in order to pass clarity. You think they'll do it?
It's going to be a split decision. right? Like privacy is a true balancing test. I get the perspective of the people who do not trust the government. I also get the perspective of the Department of Defense people I work with who are worried about like weapons programs and nation state money laundering. It's going to be a split decision.
I feel a little bit in the sense that, and I hope that the American people have made it, it's very clear that privacy is a concern, and it's only rising now, especially with everything that's going on in social. So hopefully our congressmen and lawmakers are thinking about that. No PAC progressive Democrats are winnable. This is kind of a question. Crypto industry just hadn't tried hard enough. What do you think?
No, and I say that as somebody like on the Democratic side in New York. The far left is interested in state control of enterprises. Crypto is their enemy.
Okay, all right. I'm going to agree with you there.
A lot of moderate Democrats are persuadable, though. The progressives are the problem.
All right, what will Elizabeth Warren spend her Senate floor time ranting about before the clarity vote? Do you think it's going to be the criminals and the terrorists, or the World Liberty Fi?
Create 2 copies of me, because it's going to be both, right? Like she's just going to go down the buzzwords. By the way, she's also going to say it's going to destroy the banking system and cause a financial crisis, like all of it.
You're going to sit in the middle. I think she's going to go all in on terrorists again. It's going to be just the bad guys. Crypto industry should go on the offense and lobby for a no more bank bailout or stock buyback amendments.
I think this is totally viable. Paul, you and I were talking before the show a little bit about financial history, and I would remind everybody in the 1933 Act that created the FDIC for banks, there was also a little thing in there called Glass-Steagall as part of that arrangement, which split commercial banking from investment banking. If banks want to argue for more regulation, I suggest the roadmap is there and we should give it to them.
Go right ahead. Just use the roadmap. I like it. All right, a couple more questions here. In the future, all it takes is and this goes back to the point I made earlier, single use case of a major bank losing your uninsured crypto or halting withdrawals to push everybody to mass self-custody. You think that would be the case? No,
people are too lazy.
Too lazy. Man,
let's live in the real world.
I know. I know, though, and I'm not going to say to our audience that you guys are lazy, because I know you guys would jump ship in a second if something like this happened at your bank, but there's a lot of people out there that just won't. They just won't do it, unfortunately. Clarity will mark the beginning of the end for USDC and Circle.
I'm going to say no, because I think Genius did that already, if we're being honest.
Oh, okay.
Like that happened last year.
That ship has sailed. Would you ever trust X as your bank?
No. From an operations perspective, don't accumulate all your data in one place, because if you get hacked, you have a problem.
Well, okay. What about, because I want to say yes, but I look at diversifying, so I'm like, you should have 5 banks in reality.
At least 2. This is one of the few times I will give most people financial advice, having worked at a large bank. Your bank account can get bricked for reasons that have absolutely nothing to do with you. The bank could get hacked, it could collapse. Always have at least 2.
So I'm going to say that I will add bank X as one of my banks. If they have services. It will not be my only one, but it would definitely be one of them that I would use. I'm just saying it in that way. It wouldn't be the only one I would use. Robinhood will be the prime beneficiary of clarity regardless of the details. Do you think that will be the case?
No, because they're going to face a lot more competition from traditional people. Robinhood's advantage has been being at the forefront of this. If clarity brings others into the game, it's a bad thing for them.
Yeah, I agree. I think it's a no on that. I think they'll make some great products, and they'll continue to roll out a lot of new stuff, but they're going to have other people in the game going against them on that. So I do agree with you on that. All right, listen, this has been good. I love it, Austin. Thank you so much for coming in today. We love to kind of dice it up, especially with what's going on in D.C. and around this Clarity Act. So thanks for stopping in.
Thank you for having me.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.